Growth investing in 2024. What should you be looking for? What is growth investing? We're going to find out right here, right now on Barry Charles. I'm going to explain what growth investing is, what you should look for, and then start looking at stocks in 2024 that have all these sort of metrics right for you so you can find a multi-bagger in 2024. Let's get to it here at Barry Charles. Growth investing. Well, basic, simple term for growth investing is that your stock grows over time. And the quicker it grows, accelerates, the company can do, more likely the price of the stock can go up. And there's been plenty of examples of that in the last few years. We've had Tesla go to the moon. We've gone Meta skyrocket from a bottom. Elf Beauty's been a stock that's flowing, and more recently Nvidia has gone flying up. And there's plenty of other countless stocks that have done the same, but often you might not hear about it. But it's ideally you want that to continue success over time, year after year after year. So that's what growth investing is about, is finding a company that is absolutely continuing to grow, to scale, looking ways to improve the business, to get more and more revenue coming in to give you that profit. So, well, this is the few things I think you need to look at in 2024 if you're looking to find that growth stock that is right for you. First of all, revenue growth. Yes, revenue growth, 20% plus, and over year. If you can find a stock like that and it's at a decent value, boom, that's where you can find the multi-baggers right there, right now. And some people are not looking at the stock. And there is a bit of a question mark around this one, but this is something where you can find the real multi-baggers is the ones that are not profitable, but are making big in terms of return on their revenue. They're really accelerating that, and are probably not profitable yet because a lot of people are scared to be in those companies. That's the high risk, high reward of growth investing. And if you can find those stocks right now, using all these other metrics as well, that's where you can make big bucks. You can still make big bucks on the other ones, but a lot of them are already priced in already if they're already with the big institutions. High return on invested capital, so basically any investment they put back into the business, how much profit they're getting back. If you can get something 15% or above, then that's when you're really starting to look at a stock that is really looking fair. And the higher, even better. But if you can get something up that high, that's when you start going, yes, this company is doing some good things. Ideally low debt, but some people might issue shares, and that might not be a good thing in the short term, but long term it could be a possibility if they're getting more and more. If they're generating more wealth for you over the long term, that is positive. You can have a bit of debt if you can make a lot more money out of that debt. That's fine, but yeah, low debt is ideal. Just to make sure you have that metric there that gives you the opportunity. High free cash flow, and it's continuing to grow year after year after year. If they're buying acquisitions, that is fine, but you ideally want one that continues to build more free cash flow as you go along. The assets are rising, and the total liabilities is going down ideally. But often they will continue to go up with the assets, so it's not a major, as long as the assets is real decent. And like a 50% different, or 100% ideally, between the assets and the total liabilities. The higher up, the even better, but it's at least 100% difference. So 100 billion compared to 50 billion total liabilities. That's the sort of things I'm looking for when I'm looking to invest. If you're looking for that big multi-bagger, if we can find it, that's where you can make life-changing decisions. But you can also lose it all, so not financial advice. Yeah, when you're looking at growth stocks, you're looking for where is the growth opportunity in their company. Have they got scalability? This is all the things you need to understand with these companies. You've got to find those companies that are going to continue to grow over year after year after year. Or are they starting to stagnate? With some companies at the moment are going through that phase. Apple is one of those. Are they going to continue to go up? Or are they going to go flat? That's where you got to find. Apple need to continue to find ways to go up. And just the same older iPhone is not going to do it for them. There's been a question mark whether Apple are really being creative over the last few years. They really need to go to another level. It's up to Apple if they want to be doing that. That's a question mark for every Apple shareholder out there. But let's just give you an example of what's happening. Where you look at a company like Meta, for example, they're bringing out the smartwatch where you can read something in a different language and get it translated to you just right in your glasses, and you can read it all right there. It's going to be an interesting space there. Google apparently tried it about 10 years ago. It failed, but this might be the right time for that sort of technology to come out. Very interesting works there with Meta. Can this possible company find ways to get revenue where they don't have to put much effort in, with like a subscription base, that sort of thing? This is stuff they can add to the company, whether it's like a Netflix or a Microsoft, for example, where they just keep buying every year after year after year. So that's just some ways you can look at doing growth vesting into 2024. So where do you find them? Well, you got to do the research, baby. Yep, got to do the research. Number one, if you are in that sort of lucky realm of investment that you can look at angel investing into companies that haven't even started yet, that are planning to go on the private, onto the public market. If you can get there beforehand, that is ideal. There's a big way to make bigger growth because you'll get it at a discounted rate. If you're going to buy an IPO that's coming up, do not buy straight away. I suggest do not buy it straight away, because often what happens with these companies, they go crazy, just all the hype and hoopla. Within 6 months, it crashes back down to pretty much the IPO level. That's when you have a chance to buy it back in. And that's the way you should invest, especially in the IPO. But if you're looking at a stock that's already on the market, and you might be thinking, how come the stock keeps going down and down and down? It could be just negative news, or it can be the fundamentals. But if it's just negative news and there's nothing that's actually going to affect the company long term, and you think there's a future bright, start doing more research. Look at the annual reports. Look at everything, all the information out there on the internet for you to give you the idea. You can look at earnings per share, is that going up? What's the PE ratio like? Are they likely to grow? Obviously, the return on invested capital is a big one. There's so many metrics out there for you to understand the company. But it's all about, at the end of the day, getting a stock at a discounted rate is ideal to make sure you help yourself on the growth path. But it doesn't mean you can't buy a stock now. If it's got all those metrics and the fair value, you can definitely buy a stock. Doesn't mean you get as good at gains, but it's still, if you're gaining, that's all it's about. Especially if you can get over 100%, if you can continue and grow and grow and grow. What do you need to do after you got the growth invest? Sometimes you just got to let those babies run, but sometimes you got to realize, the Zoom was a prime example. Boom, you had to get out of that one at the right time. There was a boom period for Zoom. Will it ever go back up there? I don't know, probably not. It possibly can, but that's just that one company example of where it crashed and burned. But that's just something to do more research on. But anyway, that's a little bit about growth investing. Have you got an idea of how to go about it in 2024? What some stocks that are likely to grow in 2024? Well, I'll put one out there. I think Palantir is a big chance of really booming in 2024 and going forward. If they can continue to get big contracts, it's going to be an interesting space for that. That's just one example. There is so many out there. These less riskier ones out there, these more, but I don't think Palantir is a risk now at this stage. They're becoming profitable, and once they become fully profitable, boom, you'll see the institutions buy into this company. This stock will fly high. Whether it's an absolute multi-bagger, I'm not sure, but it's definitely a stock that can definitely be a decent long-term play for you. But anyway, not financial advice. Do your own research before you invest into any company. Invest at your own risk. But thank you so much for joining me, and have a great day out there.